Welcome to this week's edition of the 6-5 podcast. I'm your host today, Daniel Newman, leading the charge with my bestie and co-host, Mr. Patrick Moorhead of Moor Insights and Strategy, rolling out this podcast at the end of your Friday. And I hope you're glued to your seat and not leaving the office without a dose of the 6-5, because we usually do this on Friday mornings, Pat, but we had to push it back because of the craziness of our schedules and the craziness that is the 6-5 Summit. But, Patrick, I did hear a rumor that the registrations were coming in so fast that it nearly blew up the reg site. Can't hate that. This event is going to be awesome. All right, let me pause. Pat Moorhead, how you doing this Friday?
I'm doing great. And, whether it's 5 a.m. or 5 p.m., it doesn't matter on a Friday. We're going to crank out a 6-5. And I'm pretty sure people are staying on their computers longer just to watch this live. I don't know.
Pat, I think for whatever reason that is the deal. People just, they stay, they wait, and they say, I refuse to leave work today until I get a dose of the 6-5. Hey, so with that in mind, just a quick reminder for everybody out there, this is episode 80. The 6-5 is 6 hand-curated topics. We talk about them for approximately 5 minutes each. And the idea is lots of analysis, not a lot of news, a little bit of news, just enough so you know what topic we're talking about. Today we got Amazon, Samsung, HPE, Splunk, Cloudera, and we're going to talk about a few different companies and their announcements at Computex. Now, reminder, this show is for information and entertainment purposes only. And while we may be talking about publicly traded companies, we may talk about publicly traded companies' earnings, please do not take anything we say as investment advice, and probably don't buy AMC at this price. But again, not investment advice. All right, Pat, you ready to get started?
Let's just dive in with feet first here, buddy. Let's do this.
So what's the first topic? Oh yeah, it's my turn to make the charge. So we're going to start out talking about Amazon Sidewalk and the misunderstood narrative that's going on in the media, the press, across the board right now. We're analysts. We look at these spaces through the lens, and we try through a lens of trying to be as neutral as positive as possible. Of course, I think we're both a little bit bullish by nature. So you'll hear us giving positive assessments more than negative because we love tech and we want things to work. We want innovation to be good, but we try to look at things, like I said, not through rose-colored glasses. And we try to provide, when something's not good, we try to tell you that. That's what good analysts do. Sidewalk is an interesting one. So the press over the last few weeks has been giving a pretty difficult time to Amazon about the Sidewalk announcements. Now, as kind of just a little bit of background, the whole idea of Sidewalk is a community of mesh-like networks that takes a little bit of the bandwidth that's put off by all of these things in our smart homes to enable people's devices to stay more reliably connected. And so if everybody, for instance, in the neighborhood is using Ring doorbells, or different Amazon-based thermostats or security or echoes, it could just take a little bit. And I mean a little bit, I'm talking about, I think the entire amount of bandwidth that can be shared on a monthly basis is equivalent to about 10 minutes of high definition streamed content. So you're not talking about a lot. And the thing that's going on right now is this is a new feature that's going to be rolled out, and largely what's going to happen is when it does roll out in full, people whose devices are connected to the network will automatically be opted in for the time being. Now, all these publications, Pat, are out there basically saying, don't opt in or opt out immediately, and are giving this kind of illusion that if people don't opt out, that almost like they're not going to be able to get out later. And I think what I wanted to take our time here to do, Pat, is just spend a few minutes talking about some of the kind of misinformation that's out there. Look, every device that goes on the network creates a security risk, period. Every time that you buy an IoT or a smart device, you are relinquishing a little bit of security. Even if you're fully end-to-end encrypted, you create a little bit of risk. And if you are allowing yourself to be part of social communities, like with Ring doorbells, or if you're part of Netflix, any of these things, all these things that get your data out there, your data is being used. Now, we're in this privacy era now where it's kind of an opt-in versus opt-out discussion. But first and foremost, June 8th is the day that this thing toggles on. But the reality is, yes, you will be opted into it, but you can opt out anytime. That is your right. So first and foremost, whatever they're saying, if you don't opt out on June 8th, you can opt out on June 15th. You can use it a little bit, see if it's a problem. You can opt out. The second thing is the fact that the whole identity that people are only getting a week to opt out. Well, not really true either. I believe the announcements of Sidewalk came out months ago, and the company has, in fact, verified that it sent emails as early as November of 2020 to Echo customers to notify them that they had the right to opt out of Sidewalk. Ring users, in fact, have in some cases already been opted in and are using it, and life has gone on, and I have not heard yet of any significant breaches that have come as a byproduct of these beta users of Sidewalk. And the one other thing, and like I said, I'm going to lead on this topic, and everybody out there, I'm going to sometimes take more, paddle sometimes take more. I'm sure you'll have some ads here. The security aspects of this is that there's so little available data, and there are so many layers of security at the application, at the hardware, and the security level that people are making it sound like this, making your network available. This to me is no more making your network available than having an SSID that someone can drive by your house and see, which by the way is almost every house on the planet. Look, if somebody's dumb enough to not update their password and login configurations, your network becomes vulnerable. There are more security layers that are inherently baked into these IoT smart devices because Amazon is actually doing it in the cloud and protecting this and making this little partition of data merely available to those locally and in a secured way. It just isn't that big of a security risk. Now, my last thing, this doesn't mean it'll never get hacked. Okay, the government gets hacked, big enterprises get hacked. There's a chance someone might hack your Ring doorbell. They might be able to see your camera, and there might be some sort of disruption of service. That is entirely possible. But the reality is, Pat, I think these are more fear-mongering stories than reality. Sure, Amazon is trying to get more data. Every big tech company on the planet wants more data. This is kind of I spent 5 minutes now straight talking, and all I'm going to end on is saying this is a nothing burger.
Daniel, you did a phenomenal job breaking that down, and I am glad you took all the oxygen out of the room because no, you did a great job. You did a great job doing it, and I contrast this to AirTags, right? AirTags that theoretically I can stick an AirTag in your backpack and I can track you. Where was the freak out on this, Daniel? Apple didn't even give you a chance to, they're automatically opting you in to AirTags. And oh, by the way, if you opt out, you can never track your phone. Okay. So and you're losing a critical tool to find your stuff. So what is it about Amazon that's different from Apple? I have no idea. And we saw a very certain freak out, a very similar freak out when it came down to another product, the Amazon Always Home Cam, where people were afraid that there was going to be a drone that was going to go through your house and go through your home and spy on you when you were sleeping. It would just open your own door and walk in and take videos of you while you were sleeping. So I don't know. And Daniel, you hit it on the head. Nothing is unhackable given time and resources. With countries' resources, you can get in. But I look at the security, that the 3 layers of security that Amazon put in. I also see the trial that they've been rolling this out for a while. I got a notification months ago, and yeah, I opted in to everything. Do I know the risk that I'm taking? Absolutely. But do I like the benefit of being able to troubleshoot when my Wi-Fi goes sideways, or the ability to track my dog? in somebody else's neighborhood, yeah, that value proposition sounds pretty good. So, Daniel, great job. On that.
Just staying connected, buddy. Just staying connected. Nothing burger. I'm going to reiterate that. It made for a bunch of great headlines. All right, let's go to the next one where I'm going to give you the floor, and I will probably only have a few things to add. But big week this week for our friends at Samsung. A big win. Tell a little bit about this Walmart deal.
Yeah, so I think most of us consider Samsung Mobile a consumer play, right? And it's hard not to with the best camera in the industry with the S21, right? With kind of lower end, lower price devices that it has, but it has a very robust commercial business, and a lot of that is due to first of all Knox security, which Samsung calls defense grade security that they harden their Android with. And they also have special designs that, for instance, you can throw against the wall that are hardened. I try to do that with your iPhone, by the way, hardened against getting beaten up and having water poured on them or having dust. Their tablets, they even have a tablet line that has replaceable batteries. Which, if you're a police department and you don't want to put something on a charger and you just want to change the battery in it, it's a much better solution. So they won, to my knowledge, the largest mobile deal I have ever heard of with Walmart, 740,000 Xcover Pro smartphones. And not only can what Walmart calls associates, they can use them at work for, scheduling, clocking in, using push to talk. Hey, I'm out of maple syrup on aisle 17. Can you check the back for me? And also they're integrating this thing called Ask Sam, which is a voice assistant, which is, hey, Sam, can you tell me if we have any maple syrup available under this brand? And it will basically come back and tell you. Things like stocking, right? On the Xcover Pro has an optional QR code reader that when you want to do a cycle count and see, okay, the computer tells me I have 10 life rafts over here, and is it actually there? You can scan it. So that's pretty cool. So when it comes to frontline worker use, and there's actually more, workers can actually use these at home for their own personal devices as well. So hats off to Samsung for this, and also hats off to Walmart for giving its associates a really cool phone that literally you could throw against the wall and it will still keep ticking. And I think this is a really cool implementation of not only frontline workers that you and I have been researching so much, but also the ability to attract employees, right? You get a free phone if you're a Walmart associate.
Yeah, I think you can't underestimate the value, Pat, in companies starting to outfit more of their teams with valuable technology. I mean, look, high-end phones and laptops have long been something that, if you're a knowledge worker, would be part of the gig. But a lot of people working in, frontline type jobs didn't get these devices. So, when these were initially brought into the limelight, I remember, I think the rollout of this thing was at NRF a couple of years back. I was in New York for that when they rolled out the partnership, announced these new devices. They also did a pretty interesting partnership with Microsoft Teams, if I recall, with these devices. But I mean, I remember a lot of the positioning being, they would be devices that could be shared. Multiple employees would kind of come in and out, log in and out, and use them. What I really like here is seeing that the company's seeing the value in giving these to every employee. To me, it feels like a bigger commitment, and it's really good to see kind of how this is going to work in the wild in such a tremendously large use case, Pat. So big win for Samsung Business. One of those use cases. I think we were all kind of waiting to see could they close a deal this big? Was it going to get past like the dock? I still remember the era of the Nextel. And this is kind of that thing for the modern frontline worker. And now instead of having just a phone with a walkie-talkie, though, they literally have a supercomputer in their pocket that can do everything and anything. And by the way, it can carry on, so they can take it home and TikTok and Snapchat and do all the other good stuff. Good one there, Pat. Good catch. Good story. Congratulations, Samsung. Walmart, I'm sure I'll see you soon for something. All right, let me drop into the next one, Pat. HPE followed Cisco and Dell and ISG, and was the third of kind of the big IT OEMs over the last few weeks to report its quarterly earnings. And this to me was a big one. It was a wave where I had come out early and said, this is going to be the quarter where on-prem infrastructure returns to the black. And I am one to often ignore when I make inaccurate prognostications, but I'm never one to forget to make a victory lap when I get it right. So I predicted a high single-digit percentage of growth across the board. And by the way, if I'm not mistaken, I think I think Cisco was around 7, Dell was around the same, and Hewlett Packard Enterprise came in at 11, but I want to say it's 9 because you had to adjust for constant currency, which, by the way, I only adjust for that when it helps me. And in this case, it did. A couple of things, though, that I really called out from the earnings, Antonio Neri's remarks and comments. One was the growth wasn't heavily weighted to one part of the business. Now, the company's business is heavily weighted to to compute and storage. That's where a lot of the revenue, I think it's about 2/3. But if you go across all their segments, they had edge, IoT, HPC, storage, compute, and their services business, and then of course financial services. Every part of the business grew except financial services, and that only took a very small loss, but actually was up on margins. But really solid growth at the intelligent edge. A really good result from the business from compute and storage. HPC had a very strong number, and GreenLake came in at I believe 30%, or on the as a service. Now everybody remembers that Antonio Neri came out almost 2 years ago, said by 2022 the entire HPE portfolio would be available as a service. Now I'm holding him accountable to this now because we are 1 year, not even, away from this promise. And I will say the company has done a good job. It has diversified a lot of products. And I believe at its upcoming Discover, Pat, we'll be announcing more services that will be coming into that family. We'll have to wait and see. But the point is, definitely ramping up its as a service, definitely ramping up its hybrid cloud offerings, trying to really move to this annual recurring revenue model. And I thought it was a pretty robust result for the company. Overall, my impressions, this is still a company in transition. The market wasn't particularly jazzed. The stock didn't shoot up from this result. But again, it has gone up a little bit into earnings. I continue to say this is just the trend right now. Nobody's acting on the news. Everybody's acting on the rumors. IT on-prem is up. I envision this is to continue to happen. And so before I turn it to you, I'll just say the biggest thing I'm watching is that recurring revenue number. The company, in order to stabilize and prove its whole ARR concept, needs to show that it can grow. Neri said 30 to 40% compound over a multiple period of time was going to get the company to where it needs to be. So as we've talked about with Pat Gelsinger, as we've talked about with our friend Jim Anderson at Lattice, I've become a huge fan of say do. If he says he's going to do it, I hope he does it. So good quarter for HPE.
Yeah, last quarter when I got to talk to Antonio, he said, I asked him about growth, and he said, well, watch the future. And sure enough, they cranked out. And, you and I look at it a little bit differently. I look at GAAP. You don't. You look at non-GAAP, which I understand because that's what investors look at. But, 11% revenue increase, the first double-digit revenue quarter since 2018. Which there's two ways to look at that. The first one is to say, oh my gosh, that's incredible. The other way is says, wow, you had a difficult couple of years. But here's the deal. they never committed to anything over single a digit here. So hats off to HP. What blew me away, Daniel, was the 10% on compute. And some people had thought that HPE was getting out of general purpose servers. Well, look at the profit dollars that came out of that 10% of what they call their core business of compute, and that's in contrast to growth. Super impressive. The other thing that was impressive was free cash flow. Almost $370 million of free cash flow out there. And then what did the company do? They raised free cash flow and EPS outlook. And like you said, Daniel, they were rewarded with an indifferent Wall Street out there.
Well, in total fairness, though, Pat, Zoom grew 191% and the stock didn't go up either. So, and yes, I know they grew 369% the quarter before, but we really have hit this point where I don't know if anything goes up for the right reasons anymore. So, we try to look at the fundamentals, the technicals, the strategy, the business, meet the technical innovation with the numbers to say, hey, are these companies committed to their truth? So I hope that's what you as an audience hear when you hear us talk. If we could predict what would go up or down, we wouldn't be doing this podcast. I'm just being honest to you. We'd be doing something else. So let's talk about Cloudera, Pat. Big week. I mean, I had to take a call this weekend on Memorial Day because something big was about to break. I'll let you break it.
Yeah, so I think you and I both talked to the president, Mick, at Cloudera, and it was a big news. That's essentially that Cloudera is going private, being acquired by KKR and CD&E for $5.3 billion. That's about a 25% adder to what the stock was currently trading at. And I think it's a great thing. And let me tell you why. Strategically, so first off, Cloudera invented the whole concept of big data with Hadoop. Now, they've fully grown up off of Hadoop. They're not married to it. We've got Spark, and they're the first company that had a full end-to-end data lifecycle product. First came out on-prem. And then what we saw in the last 18 months was they brought out CDP private, and that's the private cloud version of this, and CDP public, which essentially means you can manage your data holistically, whether it's on AWS, Azure, or Google Cloud. And the only thing that they hadn't hit yet, and by the way, even though CDP is relatively new, they weren't offering a SaaS product, and there were so many comparisons, right, to a Snowflake as an example that is cloud only. So what this go private move is going to enable is for the ability to pull in the pits for a little bit and build out their SaaS property. And they made two acquisitions. One was Data Coral and the other one was Khazana, that are two very young, high-flying companies that enable them to get, I wouldn't say immediately into an enterprise SaaS play, but gives them some key building blocks to get there. And quite frankly, I don't think that Wall Street would have enough patience with them to give them enough time to build this out. Because I think Wall Street was kind of thinking, hey, we gave you guys patience to get into the public cloud, right? And then even though they just finished that build out about 3 months ago, they would likely have run out of patience. And the key to enterprise SaaS, and the reason why that's so important to Cloudera in particular, is does two things. First of all, it enables a much larger SAM, or the addressable target market, in that you can go to smaller companies who don't have data scientists, who don't have DBAs, right? Who want the driving to be left to somebody else. And the other thing it does is it takes it to new types of users inside of any type of enterprise, not just a data scientist or a complete data jockey. How about somebody in the department that has to do something with data, make decisions based on that data, or put together presentations for executives who can make decisions off of that data? So it expands their addressable market in two ways, and I can't wait to see what they do. It's not going to be easy. It's going to be hard, but listen, they're executing, and there's a lot to say for execution out there. And what doesn't get talked about a lot is Cloudera has exabytes of data with the Fortune 500 already under management inside of Cloudera.
Yeah, absolutely. You covered a lot there, Pat. I spent a little time talking to some different reporters on Tuesday when the news broke, and I kind of had the same story as you. I basically said the company needs runway. Wall Street is not going to be patient with the transformation that Cloudera needs to make. Cloudera needs to move to a more Snowflake-like model for adoption. Again, the hybrid thing works. It doesn't have to be pure cloud, but the acquisitions it's making makes it more SaaS-like, easier to adopt, more low code, which is part of this acquisition as well. What can as Satya Nadella kind of called a creator do in the data world, to be able to say, okay, I'm going to use tools from Cloudera, and I'm going to be able to use them because I understand the business, not because I'm a machine learning scientist. And that was the big thing I really took away. But Pat, I see a little EMC-esque here, in the sense of what Michael Dell did when he went private. I won't give this the same credence as a company the size of Dell, but what I will say is there was something very strategic about giving it some runway, some time to identify its strengths, get its story together, grow its customer base, improve its margins, grow revenue, come back public again. I would be very surprised if that isn't in the cards and that we won't see Cloudera's ticker once again on an exchange in the next few years. But I would say very reasonably 2 or 3 years before anything like that would be likely to happen. So that's my story.
Yeah, I mean, there's a go shop period too here. And, there are cloud native companies out there, huge ones, that need data on-prem. Google Cloud is one of them. Google Cloud is cloud native, and they're not managing much data at all on-prem. And I think I'm expecting Google Cloud to be kicking the tires.
I was asked about that. I would say the group at KKR and is it CS&K would have been very confident that this deal will go through before putting a shop deal into it. But at the same time, everybody now knows, the market all knows. But are there really secrets? Is it really a secret? I mean, there had been a few times, like I said, I saw the action on the Cloudera ticker happen on Friday after hours. I didn't know what it was, but it went up a bunch, and I saw it moving after hours, and I'm like, what's going on here? I thought they might be acquired. I thought they might be getting acquired. And then when I got the call about meeting, I'm like, oh, maybe I'm going to hear about it. Them being acquired. So big news, big week for Cloudera. Let's talk about another company that announced some earnings that's in a interesting impasse in its existence, and that's Splunk. Splunk's the data to everything platform. Big in IT ops, SecOps, observability, super fast growing, one of the fastest companies on the planet to get to 2 billion in recurring revenue. Basically it announced its first quarter of 2022. The company's in a major transition itself. So we talked about, it was an on-prem company that had IT ops services. It's moved its model to Splunk Cloud. That's its strategy right now. It grew its ARR in cloud 83% this quarter, Pat, to 877 million. Its overall ARR has now grown 39% year over year to 2.47 billion. Okay. Cloud revenue was up 73%. Total revenue for the quarter up only 16%. Now, a couple of interesting takes on this. One, company's still not making money. And this is kind of spooking some people out there. Its losses actually got a little bigger this quarter on a year over year basis. Now, my story, and I'll stick to it, is the company is doing very well. It grew 99% to 203 customers that have their cloud ARR above $1 million. So they are growing very quickly. They had now 537 customers doing over $1 million a year in recurring revenue. But the cost of scale is definitely, this continued need to scale is the big key here to turning that corner. I think largely the company is comfortable with showing losses on a short-term basis in order to get to that scale of top-line revenue to become the company they want to be. They made more acquisitions this quarter, including TrueStar, a security acquisition. And for me, I'm really looking at the durable growth. I'm looking at, are they growing the ARR? At what rate are they growing the ARR? And then I'm looking, Pat, at, are they growing their big customers? Are they getting those $1 million wins? With Zoom, I look at the $100,000 customer ads. For Splunk, I'm looking at $1 million customer ads. You're talking about a system that's basically managing the entire data ecosystem of a company. And that is what Splunk is doing on a regular basis. They're showing the right trajectory. They're winning new big named customers each and every quarter on a global basis. Their revenue is being pretty well diversified. On a go forward basis, the company is continuing to grow. Once again, I'll point out, Street was not happy with these results, did not give it a lot of positive vibes. I believe the stock was down about $10 on the day following, and that's, was trading at like 110. But the point is that this is a company in transition, completely shifted its business model, is growing revenue very quickly, needs to get profitable or needs to continue growing at an even faster clip, in my opinion, to satisfy those investors in the market, but in the right space, Pat. I think you'll agree when I send this over your way. Observability is hot. How your apps are running, how your data is being used, how secure your environment is. People are paying a ton of attention to this. Competition is heating up, but Splunk really is the company, while the name, people love it or hate it, it is the company that kind of is, it's synonymous with observability and IT and SecOps.
Yeah, it's interesting that we talked about Cloudera and Splunk on the same day. Splunk, has a potential risk to fall into what Cloudera did, what Cloudera fell into with Hadoop, as looking at as the old guard, right? There are companies like Observe out there that are leveraging that are leveraging Snowflake, that are going after observability tools to try to one up companies like Splunk. So that's what I think that investors are looking at is, hey, are they going to make the turn and be too big to fail? Now I have to say that Splunk is worth almost four times as much as Cloudera right now, but it's something they really need to look at. And I do like what they're doing, and what they're doing is leveraging core areas like security, like observability, that absolutely makes sense. And when you start to amass large Fortune 500 customers like this, and they are on I think a roll here, not that it makes you too big to fail, but enterprises don't like to change when they get into stuff. It's not like they're selling to a ton of cloud native companies who can flip on a dime or switch an API. This is I think you used the word durable type of revenue that keeps paying off. And Splunk's key competitors, when I hear their value proposition, and I bring up Splunk, they talk about it as being cost. And cost is important, and Splunk gets looked at sometimes as the expensive option, but that's not durable, right? That doesn't mean much to me. From a very rarely does cheaper win in enterprise. So we'll have to see.
Absolutely. Great points. Got to move on to our final topic of this week's edition of the 610. You and I once again cannot resist to say more. Saying less sometimes just isn't possible when there's so much to analyze. Pat, let's finish up talking about a show that you love. I love it too, but I don't know if I love it as much as you do. Computex. Pat, we were up in the middle of the night listening to Mr. Jensen Huang take Q&A from us. Very, very nice of him to allow us to have 10 o'clock conference calls. But big announcements, AMD, big announcements, NVIDIA, big announcements. Intel had a keynote, talked about some of their announcements as well. I'll give you the run of show here, and I'll close it up and take it home.
Yeah, there's a ton to talk about, and it's funny when I put this on the agenda. I was trying to look for what are some themes that can tie all of them together, and it was actually really hard on the three companies. But so let me just go down and just give you my quick takes on probably 23 announcements between AMD, Intel, and NVIDIA. So first off, I would say AMD had a very strong showing. They came out and Lisa Su blew people away when she said, yeah, oh, and by the way, we're in the Tesla Model S and the Tesla Model X for infotainment. Everybody's heads exploded out there because there were some rumors, right? And Tesla on an earnings call made a comment that they were even talking to AMD, which, by the way, they ended up giving business to NVIDIA when they said this. But you knew something was up there, and sure enough, they're in there. And by the way, Samsung is leveraging AMD's mobile IP, and the key part here was they were going to add ray tracing. So imagine a smartphone in the future with ray tracing for gaming. Again, another heads exploding. I would say the biggest news out there, though, was a program called AMD Advantage, which is a design framework to help gamers to simplify the purchase process for notebook gamers. AMD has set up a bunch of specifications for performance, for durability, for battery life, all the things that the gamers would want out there. Performance is important, but if your fan is whirring all the time and your lap is on fire, that's not cool either. So Intel has Evo, and Evo is really targeted on the go professionals, where AMD Advantage is focused on notebook gamers. AMD then came out with their 3D V-Cache, which is essentially the first instantiation of AMD doing something that looks a little bit like Intel's Foveros. And essentially, instead of putting a processor on a processor, they're putting cache memory to increase performance. And then you have Intel, right? Intel came out with a 5 gigahertz thin and light that was typically only in thick and chunky and high performance notebooks. Intel also came out with a 5G M.2 card. Interesting in that Intel is working with MediaTek, which we knew, but the M.2 card is official, and they talked about OEMs that were picking that up. And finally, NVIDIA brought out King Kong, biggest graphics card in the industry. NVIDIA calls it the 3080 Ti. I call it the 3080 Ti, but an $1,199 card, $1,199 gaming card with just nutso performance. Final announcement, NVIDIA certification for the DPU, which is the data processing unit, which is an offload networking unit, and NVIDIA certifications for ARM-based CPUs with NVIDIA data center GPUs. And by the way, I tried to find a theme across all those, Daniel. Maybe you can do it. Sure, there was some gaming, similarities and stuff between AMD and NVIDIA, but that's about all the similarity and all the themes that I could find.
Yeah, I thought the AMD chiplets 3D stuff was very interesting. I mean, the Model X and Model S stole the show. That was the biggest announcement, got everybody super excited. Everybody kind of thought that Tesla was going to do Tesla. It was going to build its own, control its own, do its own,
for everything. Yeah.
For everything. And so I don't know what that says about Tesla, but Elon Musk is a fiscal booger. I mean, he did have a very public breakup today with Bitcoin. I think we don't know because he only uses emojis now. He is the meme stock of Twitter personalities. Huge move for AMD, obviously, because to some extent they weren't really even in the conversation about vehicles lately. They've been kind of out of that conversation. So there goes Lisa Su, which, by the way, will be speaking at our 6.5 Summit, along with actually Jensen Huang, Simon Segars, and Pat Gelsinger. You're going to hear from all of the CEOs of all these companies. So you better be attending. Hit that registration button. We'll put it in the show notes. And a couple other things that just really quickly caught my attention. I think the reiteration from NVIDIA on the DPU, I think that's still really being absorbed. So they spent a lot of time talking about Bluefield. Listen, getting these, you talk about network offload, like this isn't like a small deal. You're going to make every CPU, every general purpose CPU, every, processor in the data center, the edge, more powerful by offloading it from having to do things it's not effectively been designed to do. And then the things that we need our CPUs doing, it'll do better. And so, they're not the only ones doing it, but they are arguably the best at marketing it. Like Marvell's doing some really interesting stuff in this space, for instance. Nitro from AWS is another one in that space. Last thing, Base Command was pretty interesting to me. I like the whole idea. Somehow NVIDIA is finding a way to create subscriptions and recurring revenue. They did it originally with GeForce, with the gaming subscription service. But like at high-end enterprise data science, they are now leasing out supercomputers, for about $90,000 a month. You can get a NVIDIA NetApp baked AI data science analytics application development suite of tools, and you don't have to buy any hardware. So only $90,000 a month, Pat.
Isn't that crazy that NVIDIA got into IaaS and nobody wrote about it? I looked for it, but they are in the IaaS game, and it just blew me away.
A cloud native subscription based supercomputer. Period. It's also a full stack. It's hardware, it's software, it's frameworks, and you can rent it. And so they did the Ampere, the A100, the DGX that you could rent the unit for your data center. But this is like the full suite. This is the whole stack. Now they're going to start shipping a data scientist to your door. Anyways, this is a big one, Pat. I'm going to wrap it up there. What a week. What a big show. We could easily spend half an hour, 45 minutes. I'm going to close this show like I close up every show. And I'm just going to say, have you heard that Pat and I, Futurum and Moor Insights are doing an event? It's called the 6.5 Summit. Go to the65summit.com. We'll put it in the show notes. Did I say we put it in the show notes? We're going to put it in the show notes. Be there. It's going to be amazing. Over 50 session, live Q&As each day. Over 15 presidents and CEOs of some of the world's largest tech companies, headlined by Intel CEO Pat Gelsinger. But the lineup is amazing. So we hope to see you there. But for this episode, for Friday, for number 80, Pat, it's time to say goodbye. So say goodbye.